that people are waiting and still looking to buy into the market?
Because of the war, to be honest, the inflation is going up. How the market is going to be?
Quite low.
Yeah.
It's a good time to go in and still invest. Prices reduce further, or rental prices go further down if I'm an investor.
25% below the market. I don't see any reason why they should not start investing right now. If I have $1 million to buy a property, I would rather invest that $1 million somewhere else. My rent would easily cover the mortgage.
In the long term, they believe the market will come back up again. Good price on the asset.
Cut this out.
Hi, this is Abdul Kadir from AKF Inspire. I have Karan with me today from the FinWing Financing Brokers. He's going to answer some hard questions on financing in today's market, especially during the Iran war. Also, Karan, great to have you on board today.
Thank you.
So, Karan, during the situation, it's a tense, uncertain circumstance right now. What are you seeing in the banking world? Are banks financing? What is the issue? Are valuations coming to what the prices were 1 month ago? What is the current situation?
So I would say the amount of business that we were doing before the war versus now, it is significantly down, I would say. But also on the other hand, banks are still financing. What I'm seeing with the investors are people are trying to take out equity from their existing properties and keeping the cash ready for if there might be some sellers who might reduce the price because of the current market and be open to sell it at a low price. And the investors are keeping themselves ready for such situations so that they have the liquid cash flow available to finalize the property right away.
Yeah, and I think I agree with that actually. And I've seen the same where buyers are waiting on the sidelines to find the right time to enter the market.
Yes.
and pick up good deals, and especially if they are refinancing and taking out money. And that just shows, I think, in my opinion, is the longevity of the real estate market and the confidence in the Dubai real estate market, that people are waiting and still looking to buy into the market.
Yeah, even if you have seen the 2008 crash, the 2017 pre-COVID downfall, the market correction, even the 2020 crash, it eventually did bounce back. And the investors who were ready to pump in their money and find the right deal for them, they have made a lot of money right now. Right, some of the sellers are going below market and some of them are not. You might know that on a better scale because you're working directly in the real estate.
Correct.
But on the banking side, I'm seeing transactions but a little bit slower.
Yeah, I think we see some panic sellers who want to sell for whatever circumstance. Yes. Then we are seeing a reduction in prices by 10 to 15%.
Yes.
But majority of the individuals right now, what we're seeing are holding off and waiting because they believe in the market, and in the long term they believe the market will come back up again. So I think that we're seeing a bit of a mixture where people who believe in the market will continue leaving their prices as is. People who need to exit, or panic sellers for whatever reason, are looking to exit. The question a lot of people ask me is, should I go direct to the bank or should I deal with a mortgage broker? Could you tell me what the difference is and what the fees they will be paying differently as well?
So being honest, I'm not just saying because I need more business, but practically the clients don't pay anything extra if they come to us versus directly going to a bank. So for example, if a client is going to XYZ bank, that bank might not be the best suited for him, because it's not always just the interest rate that we need to see. We also need to see what is the life insurance that the client is paying, what's the client's profile, because there's an interest rate for a salaried person with salary transfer is different and non-salary transfer is different. Also for self-employed, there are different schemes and not exactly schemes, but there are different things that we can put through the bank. And coming to a mortgage broker, the benefit that they have is I am tied up with all the bank. So I will take down their information, structure their profile, and then suggest them the top 3 banks, which is the most cost effective and smoother process that would offer them the smoother process. They can compare and then choose the bank, whatever bank they want. and normally there's no additional fees cost involved to work with a mortgage broker compared to a bank.
Okay. So, and with regards to, as you know, majority of investors are coming from outside. As a non-resident, if I'm coming into the country now, which bank would you recommend and why? And what would the rate be?
For non-resident, honestly, I wouldn't recommend a single bank without knowing the profile of the client. So even in non-resident, if he is salaried, I would recommend him different bank. If he is self-employed, I would recommend him a different bank. And if he has multiple businesses, and depends on how what's the profile of the client, I would recommend the bank. And the interest rate, they are a little slightly higher compared to the residents. And for non-residents, right now, as of today, the lowest interest rate in the market is 4.99%.
Okay. And during this Iran war, do you think rates are going to go high, or do you think it's going to go low in the next few months? What's your opinion?
So for the interest rates, I am thinking they might go up because of the war. To be honest, the inflation is going up, when the inflation is higher, the central banks do tend to increase the rates to get the inflation down. For example, what I have seen is the IBOR, which was eventually falling before the war started, it was down to 3.6, around 3.6. But right now, because of the inflation going up, the IBORs have seen an increase in the IBOR. It is about 3.7 right now. So it's really unsure how the market is going to be, but the central bank everyday rate is going up. You can see a slight increase in that.
Okay. And are there any other hidden fees that customers should be aware of when taking a mortgage?
When you're getting a mortgage, there are a few other fees that are involved. So for example, there is a valuation fee. Some banks do charge processing fee. The valuation fee is refundable if they are a first-time home buyers. Then they have to consider the trustee fee, mortgage registration fee, and the title deed issuance fee. These are the additional fees what the customer would pay. In addition to that, they also need to pay the property insurance and life insurance.
Okay.
Some banks do offer to the customers that they can get their own life insurance from outside, but 90% of the banks want them to take the insurance through them.
Okay. And that insurance, is it comprehensive enough, or do they have a choice they can take anywhere else, or they have to take it with that bank?
So 90% of the banks, they have the life insurance. 90% of the banks want to take through them. Only a couple of banks are there in the market which allow you to take it from a third-party provider.
Okay. And what makes me eligible for a mortgage if I'm a non-resident today and I want to come and invest in Dubai, and I want to invest £200,000 today into the market? How much can I take out? How much do I have to have income in my bank account? What makes me eligible to get a mortgage, and how much can I get?
So for a non-resident, you can get up to, for example, for a £200,000 house, you can get up to 60 to 65% of the value. So that is 60% is around 120 to 130,000 pounds is what you can finance through the bank. Remaining you would need to pay from your pocket. And the qualification, it again depends on client to client, profile to profile. And also, because I cannot give you a fixed salary what you would need, because also the age is also a factor which would affect your eligibility.
So the $1 million question today is, should I get a mortgage in the current circumstance that we are in?
Many people would have different opinions, but as per the calculation and seeing the past history, in any country where the mortgage interest rates is lower than 5%, I would normally recommend to get a mortgage. So for example, if you get a mortgage at, let's say, 3.99, you are paying that on a reducing balance. If you see the flat rate that you're paying is around 2 to 2.5%. Where, for example, if I have $1 million to buy a property, I would rather invest that $1 million somewhere else. I cannot say where I would invest, but there are many other investment companies that I would go to, or there are many places where I could invest the money, which could give me easily 10 to 12% returns in today's market. rather than blocking my money in the property where I can get a loan for 4%. So technically, if I have a million dirham, if I buy a house with a million dirham, I'm just getting the capital appreciation on the property and the rental yield. But if I of my 1 million dirham, if I invest 800,000 in a place where I'm getting 10 to 12%, and the remaining 800,000 I finance it by the bank to buy the property and 200,000 down payment, my rent would easily cover the mortgage at most of the places. Plus, I would get the capital appreciation of the property. Plus, I would be getting the compounded interest on the 800,000 that I invested rather than putting in the property.
Okay, that makes sense, especially with rates being quite low.
Yeah,
it's a good time to go in and still invest, depending if you get a good price on the asset. So I think that a lot of investors would say, should we go in now or should we go in 6 months if prices reduce further or rental prices go further down? If I'm an investor, then that will have an impact on my mortgage payments, I expect. So what's your opinion? Should you hold off for another 3 to 6 months, or should you look at buying now? What's your opinion?
My opinion on that would be seeing in the market, if you are an end user, if you are getting a good deal, then you can wait and you can invest it right away, because we don't know if you have, as per the past results, I would say, whenever people think that they're going to invest in the next 6 months, then they see a price increase and then they just keep on delaying that. If you're looking for yourself, if you're getting some deal, I'm not saying buying at the price what the price was before the war. If you're getting any discount on the price, and if you think that's suitable for you, I would say go in.
Yeah, I think especially if you're an end user, it's a good time to come in.
And also for investors, if you're getting some deal which is 10-20% below the market, 25% below the market, I don't see any reason why they should not start investing right now.
Great. Thank you, Karan, for your time. Much appreciated.
Thank you so much.
And hopefully speak to you soon. Thank you.
Thank you.